Lines wrapped around buildings, escalators overflowing with people, 700 dealer tables, pandemonium. For the first time in history, America's largest refiner stopped accepting silver. Leasing rates exploded at 200% overnight. Verification devices completely sold out, 4 to 8 week back orders. Industry veterans with 20 years of experience, all saying the same thing. We've never seen anything like this. Silver hit $80, and the crowds grew larger. Something fundamental has broken in the market. The question is not if you've heard about it. The question is, do you understand what it means? Welcome to Currency Analyzer. If you've made it this far in your life, you understand that real information, the kind that actually matters, doesn't come with flashy graphics and loud music. It comes from careful observation, pattern recognition, and the willingness to see what others refuse to acknowledge. We're not here to entertain you. We're here to analyze what's actually happening in real time, while others are still reading yesterday's news. If that appeals to you, if you value strategic economic intelligence delivered without the noise, then consider subscribing to this channel. Think of it as marking a source you can return to when the headlines stop making sense. And before we continue, we're curious, where are you watching this from? What part of the world are you in? And what are you seeing in your local markets? Drop a comment below. We read them all. Now, let's examine what actually happened at the F.U.N. show 2026, and more importantly, what it signals about the months ahead. Orlando, Florida, January 2026. Something unusual was happening at the Orange County Convention Center. By 7 in the morning, lines had already formed outside the building. Not small lines. Lines that wrapped around corners, stretched down hallways, and continued growing as the morning progressed. This was the F.U.N. show, the Florida United Numismatists Convention, one of America's largest coin and precious metals gatherings. But this year was different. Dealers who had attended this show for 20 years, some even longer, stood inside and watched the crowds with genuine surprise. One dealer named Hayden from SD Bullion had been coming to this show since he was 12 years old. That meant more than 2 decades of attendance. He looked at the line of people still waiting to enter and said something striking. "I've never seen anything like this for any U.S. coin show." He had been to the Berlin World Money Fair every year, a massive international event. Even there, the lines were not this long. Inside the convention hall, more than 700 dealer tables filled the space. In previous years, 600 tables was considered normal. This year, they had added another 100, and still it felt crowded. Alex from Stacker Vault walked through the aisles and described what he saw as pandemonium. People were not casually browsing. They were focused, determined, moving with purpose. The energy in the room felt different from previous years. It was not the relaxed atmosphere of hobbyists enjoying their weekend. It carried an edge, an urgency. And then there were the sellouts, product after product, completely gone. Alex mentioned that his company had sold out of many items entirely. These were not small inventory quantities. These were bulk products, the kind that typically lasted through an entire show. The Sigma Metalytics devices, used to verify the authenticity of precious metals, were completely sold out across the entire show. As the largest global distributor, Alex had never seen this happen before, not once in the company's history. Back orders stretched 4 to 8 weeks into the future. Think about what that means. These devices cost hundreds of dollars each. They are not impulse purchases. They are tools that serious buyers use, people who are acquiring enough metal that verification becomes necessary. And they were selling faster than they could be restocked. Isaac from Premier Rare Coins was attending his 3rd F.U.N. show. He had been a dealer for about a year and a half. Even with his limited experience, he could see the difference immediately. This is almost like 2 or 3 times the amount of people. When he walked in on the first day, he was genuinely shocked by the number of dealers standing in the aisles and the public attendance. He estimated somewhere between 10,000 and 15,000 people would walk through during the show. For a coin show, those numbers are extraordinary. Joe from Beantown Coins had more historical perspective. He confirmed this was probably the biggest F.U.N. show ever. In previous years, 600 tables was common. 700 was unprecedented. "There's going to be no walking room here in a little bit," he observed. But size alone does not explain what was happening. The real story was in the behavior. At $60 per ounce, silver had been a difficult sell. Dealers could barely move inventory. Customers hesitated, waited, hoped for lower prices. Now, with silver at $80 per ounce, lines formed outside the building. Ken from U.S. Coins, one of the largest coin shops in America, noticed this inverse relationship immediately. Higher prices, bigger crowds. It defied normal market logic. At $60 silver, we couldn't give it away, and at $80 silver, we've got lines out the door. This was not typical collector behavior. Collectors usually buy when prices drop. They wait for bargains, look for deals, time their purchases carefully. This crowd was doing the opposite. They were buying into rising prices, competing for inventory, and showing no signs of hesitation. Greg from Heritage Auctions, one of the largest auction houses in the world, provided context. The F.U.N. show always performed well because it came right after year-end. People received bonuses, profit distributions, and they wanted to deploy that capital immediately. But even accounting for that pattern, this year was different, and the crowd was not just larger. It was different in composition. Younger faces filled the aisles. The demographic was shifting. This was not the traditional coin collector crowd, older gentlemen with decades of experience. These were newer participants, people in their 20s and 30s, entering the market with capital and conviction. Something had changed, and everyone inside that convention center, whether they fully understood it or not, was witnessing the early stages of that change. The question was simple. What were they seeing that others had missed? 3 days before the F.U.N. show opened, a quiet crisis was unfolding in American refineries. Trent stood in the trading office of Elemental, one of the largest precious metals refiners in the United States. His phone had been ringing constantly. Coin shop owners from across the country, all asking the same question. Why aren't you taking our 90% silver anymore? For decades, the process had been simple and predictable. A customer would bring old silver coins to their local coin shop. The shop would buy them. Then the shop would send that material to a refiner like Elemental. The refiner would melt it down, purify it, and turn it back into bars or rounds that could be sold again. It was a cycle that had functioned smoothly for generations, until it stopped. Elemental had made an unprecedented decision. They were no longer accepting 90% silver coins or sterling silver for processing. Not temporarily, not with delays. They had stopped completely. Trent explained what was happening behind the scenes, and his explanation revealed something much larger than a simple backlog. It was a market industry issue, he said carefully. This was not just Elemental's problem. Every major refiner in America, in Europe, in China, was experiencing the same bottleneck. The entire global refining infrastructure was overwhelmed. But why? The answer was both simple and alarming. Too much silver was coming back into the market, all at once. For years, silver had been flowing in one direction, out of refineries, into products, into private hands, into collections and storage. Now that flow had reversed, or more accurately, it was trying to reverse, and the infrastructure could not handle it. Trent mentioned something that revealed the severity of the situation. Silver leasing rates. The cost for institutions to borrow silver for short periods had exploded to 200%. 200% for a daily rollover. In normal markets, leasing rates for silver might be a few percent annually, single digits, stable, predictable. A spike to 200% for a single day meant something had broken in the derivative markets. It meant institutions were desperate for physical silver right now and were willing to pay extraordinary rates to access it. But the physical metal was not available, not in the quantities needed, not at the speed required. Trent continued explaining the mechanical reality of refining capacity. Even though people like us are investing in more capabilities from a silver standpoint, it just takes time for those machines and everything. He was talking about industrial equipment, massive machines that melt, purify, and process precious metals. These machines are not ordered from a local supplier. They come from Asia, from Europe. The lead times stretch for months, sometimes longer. And even after the equipment arrives, it must be installed, calibrated, tested, brought online gradually. You cannot simply flip a switch and double your refining capacity. The infrastructure is physical, mechanical, slow to change. Trent had been in the industry long enough to see patterns. He mentioned a conversation he had during a podcast before silver hit $80. They had discussed how frightening $70 silver would be for the market. Well, we're at 80 now, he said. And he was looking ahead to $100 silver, not as speculation, as a planning scenario. $100 silver just changes the whole market and the whole dynamic of the market. At $100, the economics shift completely. Products that were marginally profitable become highly profitable. Demand that was strong becomes overwhelming. Supply chains that were strained break entirely. Trent used a term that was important to understand: stair-step approach. He was describing a market that does not return to previous conditions. Instead, it moves up in permanent steps. Each new price level creates a new normal. The infrastructure adapts, but it adapts to the new level, not by returning to the old one. At $60 silver, refineries could process material at a certain rate. At $80 silver, that rate becomes inadequate. At $100 silver, it becomes impossible. And here was the critical insight. Elemental was not just buying more silver than ever before. They were also selling more silver than ever before. Trent had spoken with a large online retailer who sold Elemental products. The retailer told him something surprising. It is better now than it was during COVID. Not in dollar terms, in pure ounces. The retailer was careful to distinguish between gross revenue and actual volume. Yes, silver prices had doubled or tripled, so dollar sales numbers were impressive, but they were talking about physical ounces sold, individual units, customer count, and by those measures, current demand exceeded the COVID-era rush. That was significant. During COVID, precious metals dealers saw panic buying, unprecedented volume, supply shortages, premium explosions. This was bigger, and it was not driven by a single event, a pandemic, a crisis moment. It was sustained demand at elevated price levels. Trent noticed something else in the market demographics. Our demographic is younger for this market. You just look at the people casting and pouring. Younger buyers, new participants, people who wanted cool products, who understood the value of silver and gold compared to holding US dollars. The refiner could see it happening in real time. Silver was not flowing into the market. It was flooding in. And the infrastructure, built for normal conditions, could not keep pace. Coin shops across America had stopped buying 90% silver and sterling. Not because they did not want it, because they had nowhere to send it. The refiners were full. The system was jammed, and nobody knew when it would clear. Trent's final comment carried weight. $100 seems certainly possible, he paused. So it pays to be long. A refiner, someone who processes metal every day, was telling people to hold their silver. That was the signal. Inside a private meeting room at the F.U.N. show, a different conversation was taking place. Greg sat calmly, surrounded by some of the rarest coins in existence. He was the president of Heritage Auctions, the largest numismatic auction house in the world, not one of the largest, the largest. When Heritage handles a coin, it is often the finest example known to exist. Museum quality, generational wealth compressed into a small piece of metal. Greg was preparing for an auction that would feature an 1804 silver dollar. The price estimate, $2 to $3 million for a single coin. But Greg was not excited about the price. He had handled this particular coin more than 5 times over the years. He understood its value, its provenance, its place in numismatic history. What interested him was something else entirely. The fact that people were willing to pay that price right now in this market. The coin market is incredibly strong, he said simply. He attributed part of that strength to gold and silver prices. When precious metals rise, interest in rare coins follows. The two markets feed each other. But there was another factor. Timing. The F.U.N. show occurs in January, right after the year ends. Corporate bonuses arrive. Profit distributions hit bank accounts. Partnership payouts clear. And wealthy collectors, the kind who buy $1 million coins, immediately deploy that capital. They do not wait. They do not hesitate. They come to the F.U.N. show with cash, with wire transfer capabilities, with the intention to acquire. Greg had watched this pattern for years, but even he acknowledged this year felt different. The volume of serious buyers had increased. Meanwhile, across the convention floor, Hayden from SD Bullion was tracking different metrics. SD Bullion operates at scale. They are one of the largest online precious metals dealers in the United States. Their sales data reflects broader market trends. Hayden was direct when asked about current sales volumes. Record numbers. Not just high, record-breaking. The retail public is buying in a big way. He mentioned something else that caught attention. Premiums were rising across the board. Bars, rounds, American Silver Eagles, everything. In normal markets, when demand increases, premiums on popular products might rise slightly, but generic products, basic bars and rounds, usually stay stable. Not this time. Everything was moving up together. That suggested supply constraints were affecting even the most common products. The entire market was tight. But the most interesting perspective came from Ken, one of the owners of U.S. Coins in Houston. U.S. Coins is not a small operation. It is arguably the largest local coin shop in America. They handle rare collections, bullion, sports cards, memorabilia, anything collectible. Ken had been watching the stacker community for 7 or 8 years. He remembered when silver was at $60 and nobody wanted it. We couldn't give it away. People waited for lower prices. They believed $60 was too high. They expected corrections, pullbacks, better entry points. Those entry points never came. Instead, silver climbed to $80. And suddenly, lines formed out the door. Ken understood what was happening. You finally got some global demand. The market's responding well. But he said something more important. All of the rhetoric and things that we heard that they were preaching about are coming to pass. For years, the The stacker community had been talking about dollar weakness, suppressed demand, artificial price suppression, eventual price discovery. Mainstream financial media dismissed these claims. Analysts called stackers conspiracy theorists. The narrative was that precious metals were relics, outdated stores of value in a digital age. Ken had listened to both sides, and now he was watching the stackers' predictions materialize. I think it's great for the whole hobby. He was asked if he saw this continuing into 2026 and beyond. His answer was careful but clear. It's one of these instances where you almost feel it has to. There's so much behind it. He referenced the ongoing discussions about dollar weakness, about suppressed global demand finally being released. I'm very bullish on this market. Then he added something unusual for someone in his position. Normally, I think when the public gets involved, it's probably wrong, but I kind of feel like the public's right on this one. That was a remarkable statement. A major dealer, someone who had been through multiple market cycles, was saying the crowd was correct this time. Not delusional, not late to the party. Correct. But Joe from Beantown Coins offered a counterbalance. Joe was a generalist dealer. He handled everything. Tokens, metals, world coins, ancients, paper money, high dollar items and low dollar items. His perspective came from seeing the entire market, not just one segment. He agreed that silver would likely outperform gold, possibly by a wide margin. But he issued a specific warning. If anybody is looking for a top to claim in their silver market, I would not personally want to be a holder of much silver if the gold to silver ratio reaches anywhere around 20 to 1. Currently, the ratio was much higher. Gold was significantly more expensive relative to silver than historical norms would suggest. If that ratio compressed to 20 to 1, it would mean silver had risen dramatically relative to gold. At that point, Joe believed silver would be overvalued. His advice: when that ratio hits 20 to 1, trade silver for gold. Not sell silver for dollars, trade it for gold. That distinction mattered. He was not suggesting an exit from precious metals. He was suggesting strategic rebalancing within the asset class. Greg from Heritage Auctions was asked about where gold and silver prices might go. His answer was honest. I have no idea. But then he explained his reasoning. With instability in the world and the economic situations, a lot of other countries would rather hold gold than US dollars. That was the fundamental driver. Central banks worldwide were reducing dollar holdings and increasing gold reserves. If that trend continued, and Greg saw no reason it would stop, then price pressure would persist. The institutions were moving, slowly, carefully, but decisively. And when institutions move, retail markets eventually follow. The question was no longer if prices would rise. The question was how high and how fast. The final pieces of the puzzle were scattered across different booths, different conversations, different product categories, but they all pointed to the same conclusion. Alex from Stacker Vault stood beside rows of empty display cases. For the first time in company history, they were completely sold out of Sigma Metalytics verification devices, not running low, completely out. As Sigma's largest global distributor, Alex had never experienced this. The devices were expensive, specialized equipment. They were not consumer products that sold in high volume, but now, back orders stretched 4 to 8 weeks. If you order a new Sigma from me today, it's going to take me about 1 to 2 months to get it to you. Alex understood what this meant. Huge demand. A lot of influx of new customers coming into this market. A lot of new money. New money. That phrase carried significance. This was not existing collectors buying more of what they already owned. This was fresh capital entering the precious metal space. People who had never owned silver before were now buying enough that they needed verification equipment. That indicated scale. Individual purchases measured in hundreds or thousands of ounces, not just a few coins. The Stacker Vault products themselves told a similar story. These were not decorative boxes. They were serious storage solutions. Manufactured in Texas, lockable, stackable, TSA approved for travel. The standard model held 240 ounces of silver. A newer variant held 300 Royal Canadian Maple Leaf coins. Think about what that represents. Someone purchasing this storage solution was planning to hold substantial quantities of metal. This was not casual collecting. This was asset accumulation. And they were selling faster than they could be restocked. On another side of the convention floor, Isaac from Premier Rare Coins was explaining why most of his inventory was already gone. Premier specializes in shipwreck artifacts, gold and silver coins recovered from Spanish galleons that sank centuries ago. These are not bullion products. They are historical artifacts with collectible premiums far above metal value. Isaac showed a particularly significant piece. An 8 Escudo gold coin from 1714, recovered from the 1715 fleet that sank off the coast of Florida. The coin was in exceptional condition, full date visible, struck just 1 year before the ship went down. The rarity was extreme. Out of roughly 4,008 escudos certified by NGC, only a tiny fraction came from this specific shipwreck, and among those, even fewer had visible dates. The price, $60,000 for a single gold coin, and it was selling, not sitting in inventory, actually moving. Isaac had been a dealer for about 18 months. He had attended 3 F.U.N. shows. This one was 2 to 3 times larger than the previous events. I imagine we're getting probably 10,000 to 15,000 people walking through here, but the size was not the most interesting aspect. It was the buying behavior. High-end collectibles were moving at the same pace as generic bullion. $60,000 coins, $1,000 coin rolls, $100 silver rounds, all selling simultaneously. That indicated broad-based demand across every price point and every product category. Dickie, known as the Libertad King of the East Coast, stood beside cases of Mexican silver coins. He specialized in one specific product, the Mexican Libertad, and he knew the market intimately. He was holding a 2025 1-ounce silver Libertad with a special finish. The mintage was only 500 pieces. The price, $10,000 for 1 ounce of silver. The premium over spot price was extraordinary, but rarity creates its own value dynamics, and people were paying. The convergence of all these signals created a picture that was difficult to ignore. Record attendance at the largest coin show in America, complete sellouts across multiple product categories, verification equipment backordered for 2 months. Refineries unable to process incoming material, leasing rates exploding to 200%, premiums rising on everything from generic rounds to rare collectibles, record sales volumes measured in pure ounces, not just inflated dollar amounts, a younger demographic entering the market with conviction and capital, industry veterans with decades of experience saying they had never seen anything like this, and perhaps most importantly, the validation of predictions that had been dismissed for years. Ken from US Coins had summarized it clearly. The stacker community had been talking about these dynamics for 7 or 8 years. They had predicted dollar weakness, suppressed demand, eventual price discovery, and now it was happening. Not gradually, not slowly, it was happening all at once, in real time, with enough force that the infrastructure could not handle it. The F.U.N. show 2026 was not just a successful coin show, it was a signal event, a moment when multiple trends converged, became visible, and revealed something about the underlying market structure. Trent from Elemental had said something that resonated. $100 silver just changes the whole market and the whole dynamic of the market. He was describing a threshold, not a price target, a structural breakpoint. At $100 per ounce, silver stops being a niche investment. It becomes a mainstream conversation. Media coverage intensifies. Institutional attention increases. And the supply chain, already strained at $80, faces conditions it was never designed to handle. The stair-step theory suggested that markets do not return to previous levels after these breaks. They establish new normals, new price floors, new demand baselines. The question for observers, for business owners, for anyone managing capital, was straightforward. Is this a temporary spike or a permanent shift? The crowd at the F.U.N. show had already made their decision. They were not waiting to find out. They were acting, buying at $80, standing in lines, competing for inventory, accepting higher premiums, ordering verification equipment they would not receive for 2 months. That behavior does not suggest speculation. It suggests conviction. Alex from Stacker Vault had described it as a bit of silver frenzy or maybe silver lust in the air. But International Stacker, standing beside him, had added a more precise observation. Something big is happening here at F.U.N. 2026. The evidence supported that conclusion. What remained unclear was how large, how sustained, and how far it would go. But one thing was certain. The crowd inside that convention center, in early January 2026, was witnessing something that would be discussed for years, not as a historical curiosity, as a turning point. The question was no longer whether something had changed. The question was whether the rest of the market had noticed yet.